Good morning. Today is Thursday, February 10th, 2011. This morning, I'm talking about waiting for the rates. And basically what just happened is the Bank of England came out with their rate policy decision this morning, and they've decided to leave everything unchanged, meaning they left the interest rate at a all-time or near all-time lows of 0.5%, and they kept their bond purchase or quantitative easing program in place to the tune of 200 billion pounds a month. Now, what's happening here is that you can see there's some volatility in the market here. We've got pound started off just right on the reaction, came down lower than dollar. All right, kind of gapped down and popped back up. Now it's sort of floating around. So we've got some risk aversion going on in the market today. Okay, you can see here. Overnight, the Aussie was lower. They reported their employment report last night, and basically the report said that they added, I think it was 24,000 jobs versus an expectation of 17,500. Their unemployment rate remained steady at 5%, and seemingly this is a good headline number. But what happened is that the majority of these gains were in part-time employment, and what that shows is that perhaps business confidence is waning a little bit over in Australia as employers aren't ready to commit to longer-term employment. So, that's something interesting that we're seeing there. So, while the employment number is positive, it's not as great as the headline number might suggest. So, I just want to talk briefly here about the euro. We had some industrial production figures came in a little bit better than expected, but we've got risk aversion in the market today. We'll just look at the euro here. It's had a nice little run as of late. You can see. That's the 5-minute chart. Let's look at it here on the 30-minute. All right, and it just started rolling over about yesterday and last night with the risk aversion that we're seeing. So they had industrial production figures came in a little bit better than expected, which is a positive sign, but nothing major going on there. The most interesting news out of the Eurozone is that Axel Weber, the guy who everyone thought was going to take over ECB, is not going to be doing that any longer. So it's going to be interesting to see, who steps up and who sort of fills that role. But the risk aversion in the market's interesting. But here's something that we should also take a look at is that the yen isn't participating as greatly as we would expect. We've got dollar strengthening versus yen. Okay, you can see that on the 30-minute chart. And also let's look at the pound versus the yen. This is interesting here because pound is still trading lower versus dollar, although it looks like it's coming back up a little bit here. Okay, but we've got yen, which is it's stronger against the Aussie here, but lower against the Canadian dollar, and that's interesting because oil prices are lower this morning. There's no real news coming out of Canada, so it's kind of interesting to see that the Japanese yen isn't the biggest beneficiary of the safe haven trade. So we're gonna have to keep an eye on the yen, see what's going on there. I think there's some inherent yen weakness, but exactly where that's coming from, it's just so hard to look at data points in Japan and say, okay, well, this is the catalyst or this is the reason why. I mean, they've had close to 20 years of stagnant interest rates. Obviously the price of the yen fluctuates around, but you can't really rely on any one specific data point to say, okay, this is the reason why. So, in the UK, it looks like we've got the pound, which is pretty much higher, with the exception of USD here. They also had industrial production figures and manufacturing production figures that came in a little bit lower than expected, and they've got this balance going on over there where the Bank of England, their major responsibility is to maintain price stability, which means basically hang on to low inflation, not to over encourage deflation, and we've seen that the inflation rate's gotten a little bit out of hand there. It's nearly twice what the Bank of England's target rate is. Their target rate is 2%. I think last time it came in around 3.7%. Now, anytime it's outside of the upper end of 3%, all right, the Bank of England has to write a letter to the government explaining why that's happening. And their thesis was that, well, with the government austerity measures kicking in, all right, there's going to be less government spending going on, and that's going to reduce demand, which thereby is going to bring prices down. Well, that hasn't happened yet. And just about every metric we've seen out of the UK has shown that there is indeed some sort of inflation going on. But I think, they're content to sort of let this thing play out a little bit before raising rates, as they don't want to seem as piling on to an already shrinking economy. So they've got a little bit of a conundrum going on there with the Bank of England. I think the longer that they let this go on, the tougher it may be. So that's kind of what we've seen out of the UK today. I just wanted to, there was another interesting point that I wanted to mention as far as the pound is concerned, but well, I guess yeah, we can talk about it. The Bank of England. Basically, there's economists around who will come out with their consensus about what they think is going to happen. And right now, nobody had expected them to change policy for today's meeting, which they didn't. But they're saying that now they're pricing in a rate hike sometime in the future. Most likely time seems to be May. So right now the market's sort of set that we may see a rate hike coming down the pike in May. Meanwhile, we still have, we can look here, pound yen. Recent highs have been around 133. Let's look at pound dollar. You can see pound is strengthening versus dollar, and it goes back up to around 160, 125 is where the most recent swing highs have been. So we're going to keep an eye on what's going on with the pound. That's not to say that we don't want to watch anything else, but we've got risk aversion going on in the market, and if you're going to tell me by the end of the day that that's good for the pound, well, okay, but my guess is that we're going to need to see the pound and the yen sort of flip around here. So that's what I'm looking at today, folks. Hope the volatility treated you well on that announcement. And do we have any further news coming out this morning? Not much. The initial jobless claims in the U.S., which have now become, just sort of matter of fact. That used to be an important figure, but we're looking at another 410,000 job losses, and we have some more Fed speak later in the day. So that's what we've got. Good trading to all.